Hey guys, and welcome to the Working Money Channel. So this morning, guys, I thought I would approach the market a little differently. I just saw this article from Cointelegraph, all right? Bitcoin network difficulty breaks into a new all-time high of 29.794 trillion. So we are currently seeing Bitcoin mining becoming more difficult as miners continue to pursue the last 2 million Bitcoin in circulation, as this article states here. So the Bitcoin network recorded a new all-time high network difficulty for the second time last month, which was April, jumping from its previous all-time high of 28.587 trillion to 29.794 trillion. Greater network difficulty demands greater computational power to successfully mine a Bitcoin block, which prevents bad actors from taking over the network and manipulating transactions. Also known as the double spending issue, as we know. As evidenced by data from blockchain.com, Bitcoin's network difficulty has seen almost a year-long uptrend since August 1st, 2021. Before that, between May and July 2021, was a timeline when Bitcoin network difficulty fell nearly 45.5% from 25.046 trillion to 13.673 trillion. So now, guys, and this article is just a couple of days old, now we're seeing Bitcoin difficulty rise again, making it way more difficult as it ever has been to mine Bitcoin. So supply is scarce, and it looks as though Bitcoin is holding on to support. We are seeing Bitcoin trading right now at 38,700 per BTC. The uptrend still has not broken. We have not broken below significant resistance here. If I bring up the total to market cap, which is the altcoin market as a whole, you can see a similar kind of trend here. Altcoins really have not broken down below this level of resistance here. We have not really seen it break down. We've seen it wick down a couple of times, and but it's holding fairly well, and that's at about $938.4 billion. So this is the altcoin market. We can see Bitcoin mining difficulty is at an all-time high. And what else are we noticing here, guys? Well, Ethereum whales have accumulated $407.4 million in Ethereum in just 10 days. So these are analytics from Santiment. Crypto insights firm Santiment says that deep-pocketed Ethereum investors have started aggressively accumulating ETH after 4 months of inactivity. So with regards to the second biggest cryptocurrency by market cap, love them or hate them, I mean, that is kind of besides the point. We know there's the issue of ETHgate, and I'm not talking about that right now. I'm just talking about Ethereum as a cryptocurrency. They're number 2 in terms of market capitalization. And so this is the second most popular cryptocurrency, theoretically at least. Second most popular cryptocurrency. There was inactivity from investors, and now they are accumulating a lot of Ethereum. The market intelligence firm says that whales holding between 1,000 and 10,000 Ethereum have suddenly added a combined 142,000 Ethereum worth about $407.4 million at the time of writing. The accumulation spike comes after nearly 4 months of a stagnation period. Ethereum key stakeholders are showing some accumulation. This happening again over the last 10 days after a long dump going back to mid-December. This is the most sustained level of accumulation we've seen in over 4 months. So there's just a chart here to show that this downtrend, the accumulation of Ethereum, has now popped up above the trend line here, the downtrend on this chart. So accumulation occurring, at least for the second largest cryptocurrency by market cap. We're also seeing Bitcoin mining becoming more difficult. So mining Bitcoin is harder and harder, which gives Bitcoin theoretically more value as well. So the total market cap up here still staying relatively stable at $1.7 trillion. We're seeing Bitcoin dominance too, still staying relatively strong too. It's actually gone up a bit, $42.5 trillion. Let's just bring up Bitcoin dominance real quickly here. The idea, right? Bitcoin dominance needs to collapse before altcoins really take off. And we're really not seeing that. We're really just seeing this vacillating trend, even from mid-2021. We've seen the dominance kind of go like this. And now we're seeing something a little different. We're seeing it go up and it's coming down, and now it's coming back up. It really missed out on hitting that support line again, and it's moving upwards. So, right now it's still anybody's guess what's going to happen to Bitcoin vis-a-vis the other altcoins. I still think, in the cards for Bitcoin, we are going to see that next leg up for Bitcoin. Altcoins will follow, and then, so we're still not there yet, in my opinion. We've also got this, guys. Yesterday was that time of the month again where Ripple unlocks more XRP from the escrow. Ripple Labs unlocks 700 million XRP from escrow, while locking another 800 million in different transactions. This brought to us by Ant1 here on Twitter. So in a recent development spotted by WhaleStats, a blockchain company that tracks large and attractive cryptocurrency transactions, Ripple unlocked 700 million XRP tokens from its escrow wallet yesterday. So it sounds as though, if I do some simple quick math here, only 300 million XRP were put back into escrow. We know Ripple releases 1 billion escrow per month, and so 700 million XRP into the ecosystem. That would mean 300 would be returned. That quantity used to be the reverse, but obviously now we're seeing more need for XRP in the ecosystem, so it sounds as though more XRP are now being thrust upon the market, whereas we are re-escrowing less and less. According to data provided by WhaleStats, Ripple unlocked 700 million XRP coins in 2 separate transactions, and so you guys can see the transactions down here. 200 million from Whale Alert at 1:40 p.m., and then another one at 1:43 p.m. 500, or at least that's when the alert was posted, 500 XRP for a total of 700 million XRP. I really do wonder, and I've got to say, seeing these numbers switch, or rather the quantity switch. I mean, there were months back in 2020 and in 2021 and 2019 even where we saw 1 billion XRP being released month after month, and it was the reverse. It was like 800 million returning to escrow while only 200 million stayed in the ecosystem. Now we're seeing the reverse. We're seeing large quantities stay and smaller quantities return, which begs the question, how much liquidity is being sourced today? Or rather, how much liquidity are they preparing to source through XRP in the coming months? So I've got some interesting information that I'm going to get to in a second with regards to the Ripple Liquidity Hub, some new clues that could point us to some answers. First, I wanted to just mention this, guys, from Tag XRP. Yeah, Tag's back here on Twitter. He posted this with regards to the CoinMarketCap fiasco. So it just so happens former CoinMarketCap CTO Movis Ledford is also an Ethereum Web3 dev. I guess this is just another conspiracy theory, and millions of us XRP holders are just crazy. So, connecting some more dots here, Movis Ledford here, CTO at CoinMarketCap. Here he is up here, just bringing up his GitHub profile, and you can see down here, Web3.js developer Ethereum JavaScript API. He was working on that since mid last year, and Ethereum-org, forked from Ethereum/Ethereum-org, Ethereum Foundation website. So there's a connection here. The CTO, Movis Ledford from CoinMarketCap, used to work for Ethereum. So interesting to point out these little clues, and I mean, the crypto space is a very, very small space, and I think these guys really seriously are trying at every angle, at every chance they get, to badmouth Ripple and XRP because they are realizing how successful Ripple has become. And the lawsuit, I mean, even though technically we're not going to get a verdict for a few months, it is coming to a close, and it feels like it's coming to a close very, very quickly. So Tag here, also just pointing out some more connections here. Ches removed price details, so also highlighting Brandon Ches here, CoinMarketCap's founder. Ches removed price details from a number of South Korean sites suspected of listing inaccurate information, causing a price crash for numerous digital assets, including XRP. So, this history runs deep. There's also a connection here to Ethereum. But again, guys, the space is fairly small. I'm not surprised that a lot of these guys did work for other organizations. In this case, it just happens to be Ethereum who, as per the XRP community's research, we have now come to the conclusion that, and I think it's very, very obvious at this point, Ethereum has been given a free pass by the SEC. And so maybe there's some inner workings here. Maybe it's just a coincidence. All things that make you go, yeah, right. Anyway, wanted to thank Tag XRP for posting that, and welcome back, buddy. I don't know if you're back permanently or if this is just a temporary thing, but glad to see you're back. Wanted to keep moving, guys. Michael at Val5Links posting this. Senators propose new crypto bill limiting capital gains tax. So if you live in the United States and you're worried about your crypto profits and capital gains, well, here are some new guidelines. Senators at least proposing this. Democrat Senator Kristen Gillibrand and well-known pro-crypto Senator Cynthia Lummis have drafted a proposal exempting crypto capital gains of less than $600 from being taxed. So a new comprehensive bill amending crypto capital gains tax reporting has been proposed by 2 U.S. senators, addressing the appropriate government oversight of crypto stablecoins and consumer protection. In March 2022, Senator Lummis tweeted, "Big reveal, thrilled to be working with Gillibrand on a bipartisan framework to create clarity, establish responsible sideboards, and ensure reasonable protections." So here's some of the things they've been working on, and just down here, the senators proposed $600 as the ceiling for no tax reporting obligations, making life easier for even the youngest U.S. citizens holding some cryptocurrency. However, this ceiling can change according to Loomis. In an interview with Yahoo Finance, we came up with a number of $600 just to start out with, but among the things that we're doing is sharing our bill draft with a number of constituents so we can get feedback. So that's the number they're starting out with. I guess it could change. It could go lower. It could go higher. Ultimately, though, these senators, they want to help protect citizens, especially people just getting into cryptocurrency, who may have, dabbled a little bit, put in $100 and maybe made a little bit of money, 6x, 7x on their profits. Anything under $600, though, in profits would not be subject to capital gains, at least according to this bill. So an interesting proposal here. I think it would also actually entice younger people and people who might not have the experience to enter cryptocurrency, and I think this is what these senators want. Ultimately, adoption is going to come when people feel comfortable, and if they don't feel comfortable, if they feel like, no, you know what, why bother? I don't want to have to deal with the taxes. Some people think that way. I don't want to make 10x on my money. I have to pay so much taxes. It's like, oh my goodness, why? Maybe I'm coming from a perspective that's a little more financial savvy, but people think that way. And so, to give them a break and to say, okay, anything under a certain amount will not be subject to capital gains, I think that's going to elevate everyone's comfort level. Those who might feel intimidated about cryptocurrency or were intimidated might now think to themselves, hey, you know what? Maybe I will try. Maybe I'll get into this. And this is exactly how we foster more adoption in the United States. It's going to be adoption. That's what's going to really get the cryptocurrency market up and rolling. That, aside from the biggie, which is, of course, regulatory clarity, which we're still waiting on. Anyway, some interesting news here. Thanks so much to Michael at Val5Links for posting that. And this one, guys, from Real XRP Boy here, just along the lines of crypto adoption and cryptocurrency regulatory clarity in the US. Shout out to Hester Peirce and Tom Emmer. White House, get your SEC in check. People running this commission are doing whatever they want and what fits their agenda. What a mess the United States is in. Here's a clip, guys, with an interview from Hester Peirce. Listen to this.
And Hester, I'd like your view on this. It says crypto startups must not be weighed down by extra jurisdictional and burdensome reporting requirements. We will ensure our regulators do not kill American innovation and opportunities. Now, he was one of 8 congressmen who recently wrote to the SEC chair, Gary Gensler, asking whether the agency's investigations into crypto are consistent with the Paperwork Reduction Act. Do you have any sympathy for his concerns?
Well, I certainly don't want to speak to any ongoing enforcement investigation, but I think that there are some real concerns about the way we've approached this space. And again, it goes back to needing to have public, transparent conversations as we try to figure out what the right regulatory approach is, rather than trying to take a one-off approach where maybe we craft a settlement with a particular entity that might work for that entity, but that will not work for the rest of the industry. I think we need to really retain a mix of wonder at the new innovation. There's something delightful about seeing new innovation, but also a skepticism. We need to, as Kate mentioned, technology neutrality is good. Sometimes you have to make adjustments to recognize certain aspects of the technology, but your rules should be written in a way that they're principles based. And then you should also look at ways that you as the regulator can take advantage of the new technologies to do things better. Mm-hmm. But I think, the way to do this is to do it in public instead of to try to have these sort of backroom conversations with individual market participants.
Ooh, backroom conversations with individual market participants. Hester Peirce obviously criticizing somebody over there at the SEC without naming names. Anyway, a great update here from Hester Peirce. Of course, another commissioner that works over there at the SEC. Hard to argue there, Gary Gensler, Brad Garlinghouse, wondering which settlement Hester is referring to, asks Real XRP Boy here on Twitter. And what backroom deals with industry participants is she talking about? ETHgate? Perhaps, likely, very likely. I don't want to speculate on that, but you heard it here. Hester Peirce did mention just that, backroom dealings with individual organizations in order to get clarity for some and maybe not for others. Okay, I'm going to leave that topic right there. I wanted to move on to this because recently we did see Ripple just update their website, and there were a lot of hints there suggesting of more things to come. First of all, we got to point out throughout 2018 and 2019, Ripple did not want to associate itself really with the XRP cryptocurrency. I mean, we all knew that Ripple utilized XRP, but there was a whole rebranding campaign, and there was this thing of Ripple is separate from XRP. XRP is a cryptocurrency that we use to facilitate liquidity. XRP was gifted to Ripple, and they didn't want to make the two synonymous, which they were becoming at that point in time. So they ran a campaign and they were successful at that. But now, fast forward to 2022, regulatory clarity is on the horizon. We have new products like the Liquidity Hub, the line of credit for XRP, lending out XRP, and now Ripple's website has gone back to being cryptocurrency focused and cryptocurrency centric. Not only that, they have now listed on their website that they use XRP in all their cross-border payment transactions. So what is Ripple's Liquidity Hub, and what does it tell us about the future of Ripple, guys? This is coming from the Wrath of Kahneman. Oh, and XRP? Yeah, he mentions that too in this thread. So what is the Liquidity Hub? It's a crypto hub market aggregator, a one-stop shop for enterprise to source crypto. RippleNet's Ashish Burla compares it to Kayak or Google Flights, websites that pull available flights and get the best deals. Instead of tickets, it is crypto. So think of it as an aggregator of all things cryptocurrency related. Customers can come, utilize the Liquidity Hub, and if they need any type of cryptocurrency, well, they can source it using liquidity through XRP and get that cryptocurrency that they need. They don't have to go to individualized locations for those purposes. They can get it at a one-stop shop. Why not use an OTC desk or exchange? It's risky to only have a single supplier. So that's the other thing. Will there be enough liquidity? Will they charge a premium as the only source? Would you trust your ETF supply to Coinbase or Binance in a run? So these are all very, very good questions. It's good to have options. It's good to have a backup. And so, if you're a big company and you can rely on a big enterprise solution to source that liquidity, why would you not? It brings the risk way down. And the demand is global, spanning many different regulations. Remember what a pain KYC and AML was signing up for your first exchange. Imagine signing up for 50 exchanges across multiple borders, multiple assets, and billions of dollars. Ripple's Liquidity Hub eliminates all the hassles by gathering the assets from multiple sources and presenting them in a unified interface. Not only that, but with the ability to compare the different sources, you can see where to get the best price. So again, similar to Google Flights, an aggregate from all the different service providers. You can see all the different prices. You can pick and choose which suits you best if you are a customer, if you're a client. And it's more composable and reliable than just one source. Get 40% of your order from the OTC Desk A and the remaining 60% from Desk B. Let the computer work out the cheapest option. It solves some custody issues and in the future, even staking. And so he just posts Ashish Burla's tweet here with regards to some more information regarding that. Guys, I will link this tweet in the description. A great thread here with a lot of great information that Wrath of Kahneman does also source as just an extension to this thread. Now imagine when the Liquidity Hub brings you results from decentralized exchanges too. Imagine integrated DeFi, all of it automated, aggregated, and neatly vetted for your shopping ease. No pre-funding is required. Ripple will even front you the credit. Just bringing up Matt Hamilton's tweet here from back in November of 2021. The Liquidity Hub isn't just a bolt-on service either. It's just some extra. It is the fruit of running an XRP-focused liquidity ODL hub for some time now. It is tested and even proven, and importantly, it indicates how Ripple itself has been evolving. You see, initially, Ripple signed companies to bilateral agreements with each place you sent to point. Now we can see a better part of ODL's innovation was creating a one-stop shop to source liquidity. So think about it from Ripple's perspective. Signing on all these customers one at a time, and it took them years to accumulate so many different institutional clients. Well, now the clients can come to them. Now they have the reputation and they can utilize the Liquidity Hub instead of using those individualized products like, remember, Xcurrent, Xrapid, Xvia from way back in 2018 before you sign to move money to a partner in another country. So now you sign because they can offer you new partners in other countries too, all behind one interface. This is a great narrative by David Schwartz here. And so he links an interview with David Schwartz talking about NFTs on the XRP ledger specifically. And the future, in November, they told us in the future, every customer will join RippleNet and some base service and a wallet designed to support both crypto and fiat. One wallet, one interface, one company routing a myriad of assets. And this is important framing to understand the recent webpage makeover as well. So going back to that Ripple website, ripple.com. Now we're greeted by business impact powered by crypto and 3 products: cross-border payments or ODL, crypto liquidity, the liquidity hub, and CBDCs, sidechains. With one Ripple wallet, enterprise can source anything that can be tokenized: fiat, crypto, deeds, tokens, and now carbon credits, all in one place. And guys, what are they going to use to source that liquidity? Obviously, XRP. It's what crypto has been talking about forever, in a regulated, secure, and reliable interface for popular use. And just down here, Wrath of Kahneman also mentions it. We knew all about this. We knew all the moving parts, but we just did not have the context. We didn't quite understand because we couldn't quite wrap our head around how the new tokenized economy was going to work, right? Now with more products, we're seeing this clearer and clearer. Again, they've been telling us this all along, we just lacked context. Ripple is preparing for a tokenized future, an internet of value. Notice all the Liquidity Hub press has seemingly mentioned NFTs. What a better way to tokenize value than with NFTs on the XRPL. So the evolution of Ripple looks something like this. Start with cross-border payments, which we all knew and all talked about and kind of understood. ODL, which is on-demand liquidity, digital asset liquidity hub, and now, guys, finally, one wallet to rule them all, because it can source it all. So what about XRP? The liquidity hub doesn't run on XRP, but neither does it power cross-border payments. It just finds crypto. ODL requires XRP, still the cheapest, most robust settlement solution around, and Ripple still holds about 40 billion XRP on the books. So, with the webpage as a guide, there are 3 XRP opportunities at Ripple right now. You can source cash via ODL that uses XRP, you can source XRP directly from the Liquidity Hub, and you can build a CBDC based on the XRPL. In the big picture, they have multiple investments in tokenization projects and Ripple X as well. In a tokenized future, what will eventually be tokenized on, you can now do it on the XRP ledger right now, or wait a few months to use the NFT protocol XLS-20D. Then consider what happens as CBDCs and the like are built on the XRPL sidechain. So guys, we are seeing more and more opportunity for utility being driven to the XRPL. CBDCs, obviously one of the bigger ones that is going to be global. It will always be cheaper and easier to use the XRP ledger between walled gardens when appropriate. And then we also have this clip from a video that I showed you guys the other day from Brad Garlinghouse at that crypto conference in the Bahamas. Ripple has partnered with several central banks around the world that we've announced, and some that we have not yet. So Ripple's Crypto Liquidity Hub is a one-stop shop for enterprise to source digital assets, and it's also a milestone for understanding how Ripple is evolving towards a tokenized future in which the XRPL can and will also excel. So a one-stop shop, Ripple ultimately acting as that aggregator, ultimately because it's their product, ultimately saying, hey business, come on in, we can source your liquidity needs. Jesse Blazo down here saying, might want to rethink the longevity of Ripple's plans. Lots of marketing at play here. The XRP ledger does about 1,500 transactions a second. That's not good. Scaling to trillions is a theory with a bunch of federated sidechains. So he's being a little critical here, no doubt. Says Wrath of Kahneman, scaling is always an issue, but what specific plans are you referring to? And what of trust lines where tokenized assets move at 50,000 transactions a second? I think too that the effect of offloading transactions behind federated nodes will have an important scaling effect. So a bit of a concern there. Winston Buki here though, saying this, it seems that Ripple is becoming a central bank for digital assets. Wrath of Kahneman responding, yeah, it is fascinating to watch. It's an interesting study of how they might be able to connect real business and real tech to finance. So is the Liquidity Hub going to be the gold standard? I mean, it sounds as though Ripple has done their legwork over the last several years now, onboarding central banks, some that they've obviously announced, others that they have not. But the important thing here is how Ripple is evolving as per Wrath of Kahneman's tweet thread. Creating a Liquidity Hub to source anything cryptocurrency related, and applying this to decentralized finance, NFTs, and other purposes that require digital asset liquidity, guys, all sourced on the XRPL. So, I didn't think about it, but this is a great analogy. Is Ripple becoming a central bank for digital assets? Are they setting themselves up to facilitate all the business on the XRPL? Similar to Google Flights, or think about Amazon, guys. Think about how much business goes through Amazon daily. All things to consider. Let's keep our eyes on the Liquidity Hub and the developments that follow. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.